All right, guys, we got EXP Greg Reitz live, and we've got Kurt on the house tonight. New lender announcement, mortgage rates, lending update, and also real estate update for national quickly, and then Fresno, Madera, Clovis, California market, so you guys can decide that it is the right time to buy and the right time to sell, sellers and buyers out there. So here you're going to get the truth, and I want to introduce Kurt Goetz, our new preferred rights team EXP lender. He's awesome. He's great, and he's looking forward to sharing with you a little some good information about lending, the rates, the programs out there, and what the market's doing nationally and locally. Kurt, go ahead.
Perfect. So yeah, we've had an interesting market here recently. The Fed just increased their Fed funds rate, and we've actually gotten a little bit better on our interest rates. The Fed funds rate doesn't determine how our interest rates go. The interest rates more closely follow inflation. So back in May, our average rates for conventional was about 5.5. July was about 5.125, and now we're about 4.75. So rates are getting quite a bit better. On FHA, we were looking about 4.875 in May. They're getting better in July at 4.5, and now we're actually somewhere right around 4.25 for well-qualified buyers.
Wow.
So rates are getting better, which really helps the buyers that are getting out there. And I'm noticing a trend where my first-time home buyers have a shot to get offers accepted. So it's really kind of exciting.
Can you explain to me? Because I don't think the normal market gets it, and I don't even quite understand that, and I want to get it. The Fed funds rate, that's the ones where they, every physical quarter, give or take, every 45 to 90 days, they meet to see if they want to adjust the rate, the Fed rate, to the banks. Can you explain that deeper for the average guy like me and the consumer, that we understand it better?
Yeah, so the Fed funds rate it's a short-term interest rate that banks use to lend extra money that's on their books to other banks. So it's more closely related to credit card rates, car loan rates, things like that. Everybody thinks that the Fed funds rate is interest rates, and it's really not.
I've been guilty of that myself,
Yeah, it's a common misconception, and the interest rates follow mortgage-backed securities and things like that. And really, if you're looking at what interest rates come from, it's really from inflation. So what the Fed is doing right now is they're going to try to stop inflation. They're trying to throw us into a recession. That's what all these recent rate hikes have been. So for a while, the interest rates were following that inflation rate, trying to stop the inflation. So at a certain point, you get the inflation that starts to stop. So we've had 2 quarters of a negative gross domestic product. So theoretically, that should be a recession. So nobody's saying that yet, but it's coming. So if we get another quarter where we get that kind of a report, then it's going to be more official. So what has happened is the rates know what's going on. So everybody that is watching mortgage-backed securities can see that inflation is starting to slow and interest rates are getting better.
That's great. And so the federal funds rate, when they meet, on these federal meetings to raise the rates, so what they do is they raise the rates to curb inflation, so it slows it down. So the economy may slow down on purchasing things because the rates are higher, and then that demand slows down, so that reduces the inflation, the cost of things going up.
Yep, that's exactly how that works.
And right now we got a good middle ground, don't we?
Correct. That's exactly what it is. So further down the road, they're going to keep raising rates, I believe, and I think the inflation, as it slows, is going to make interest rates get better.
Now I heard, from some of those, Fortune, Forbes, different things you can read on these national companies that do a lot of research in this, economists and stuff, that maybe the Feds are going to raise it in September, maybe 0.5 point, maybe in November or December, maybe 2 more times this year, depending on inflation. What do you think might happen with that, Kurt?
I think that's exactly what's going to happen. So we're expecting either 3/4 or 0.5 point here in September, and then who knows what they'll do at the final meeting. It's all going to depend on what the financials look like.
So if we're at an average rate right now on mortgages between FHA and conventional, let's just pick an average rate. Could we say 5%?
I think we're below 5% on the conventional, which is really nice.
All right.
And so conventional, my conventional rate, and we go ahead. we're skipping a little bit. Greg, are you there?
Lost you there. You
Yeah,
got
I
it?
lost you there for a minute. Are
Okay,
you
we're
there?
back. I think they're going to forgive us. So they know technology. We can't control everything. We try to be
That's
perfect,
right.
but last I checked, I'm still not perfect, and neither is my system. So yeah. So let's say it's a 4.75. Pick a rate, and then
Sure.
if it goes up a half a point in September, and then a half a point in the year, that rate could likely be 5.75 to 6 by the end of the year.
No, I actually think it's going to go better on the
Better.
actual interest rate.
Okay. Okay.
Yeah. So
Okay.
if the Fed raised the funds rate again, it's going to stop that inflation even more, and interest rates may actually get better.
So we're going to probably be around the 4.5 to 5.25 throughout the year, and maybe get better.
Yeah, correct.
Okay,
That's what
that's
we're
awesome.
hoping for. Yeah,
So that sounds like a great time for the buyers to buy
definitely.
because now they can negotiate, which I'll get into my real estate end of it here in just a few
Sure.
minutes, right? Okay, anything else you want to share? How do you think the market is right now for buyers to buy from your perspective on the loan side?
So what I'm seeing in the market is in the past couple months we've had sellers who can kind of ask whatever they want to for their offer price. They'd have a bunch of offers. You'd have some investors or somebody maybe from out of town. They could come in and bully the market and offer way over asking. They could offer, um, no appraisal contingency. They could do all kinds of stuff. And now that market has slowed a little bit. And what it's doing is it's allowing our first time home buyers and our buyers with maybe less cash in their pocket to have a foot in the door again. So I'm excited because my first time home buyers and my clients who have less cash to put into it, they're really getting offers accepted right now. So it's an exciting time to be in this market.
I would co-sign on that because I'll talk about the same thing on
Yeah,
the real estate side. Buyers that we had on the fence are getting in contract now. Even
right.
first time home buyers in the 275 to 375 range, above and less, that they're getting in contract. It's a great time to buy. I
Yeah,
agree. And sellers, it's a great time to sell. We'll talk about that in a minute. Okay, are you good on the lending side?
yeah, I think so.
I hope all the people got something great out of that. Kurt's number for great lender local here in Fresno, Madera, Clovis, California is 559-392-5009, right off of Fresno and Herndon. Our office is in the same area. So on the real estate side, guys, real estate forecast market to stay to continue to stay stable despite high home prices. Prices are moderating through negotiation. The sellers are starting to price their properties correct when I list them, not overprice them, and they know that they're not going to get the multiple offers now. Sometimes they will get multiple offers. It's a turnkey property, but that's generally going to be in your medium home price, entry level up to medium home price. When you get to more luxury homes, 550, 600,000 in Fresno, Madera, Clovis, then it slows down a little bit. You have to work it to get one or two good offers, and as long as they're priced to the market, they're going to sell usually within a 21-day period. So it's still moving well. We don't want to forget the sellers have forgotten. We have a short memory. It seems like in the United States. If we go back 2 years ago, prior to COVID, 2019, and in the beginning first half of 2020, it was taking 35 to 40 days when you list a house, 30 to 45 days to list a house. I'm gonna say about 37 days average to get an offer accepted. That is normal real estate. And we're still at 21 to 24 days. So we're still good. It's still moving above average, right? So um, existing single family homes in national statistic here was about 344,970. So call it 345,000 in June. And it adjusted 8.4% from May to June. So we had about an 8% drop from May to June of this year in homes sold. So a little bit of a slowdown there. Most likely due to a little bit higher interest rates when we were all spoiled at 3.5%, right, Kurt? And
Yeah,
now we're at four
absolutely.
and a half to 5. So, but guys, buyers, this is the market. When I bought my first two homes, I bought in at 5.75% fixed for 30 and then 6.25 on my second house. Or maybe
Yep,
that
I
was
was
vice versa.
I was
And
at six
I
and a
was
half on
happy
my
with it.
first.
So 4.5 to 5.25, great time to buy. So a little bit of a slowdown there, but you got to realize too, we had a cycle up for since 2013, up, right? and in the last year and a half, we had a 20% increase in prices. So some of the buyers got priced out of the market. Rates went up a little bit, and that slowed the market down a little bit. But now the buyers are realizing it's time to buy. The rates are good. This is the new normal. Let's get back to work, right? And what I like the fact is I'm able to negotiate all the closing costs for the buyer, maybe 10 to 15, $20,000 off a property or more in some cases. Buyers, a first-time home buyer type of loans, we're able to get the closing costs paid, VA, all of that stuff, Kurt, that you're doing for us. We're able to get them taken care of. Little bit of stats here. For this is important because we go back to January when it was the seller's market, right? And the buyers remember this: 3 to 10 offers per house, sometimes more, right? And it didn't have to be quite to the market, the price when the seller listed, it would still sell. So we had 800, and that was because of supply and demand and low interest rates. So we had a supply shortage of listings and a demand by the buyers because of the low interest rates. So in January, the numbers were 858 homes for sale on the market in Fresno County, 858 available. Now take a guess of what we had in July, Kurt.
I don't even know. Probably half that.
1,945. 858 in January, 1,945.
Yeah,
almost 2.5 times the inventory in a 7-month period. So we see the market shift a little bit here. That's why buyers, that number right there tells you you have 2.5 times the inventory from 850 to 1,950, basically. And you have those inventories, you have plenty to choose from and negotiate with. Great time to buy. Okay. Then we come down to, and I have to look at my specifics because there's a lot of them. I can't memorize all of them. Also, inventory. We had 1.1 month or 32 days of inventory back in January. That means if we didn't list as a broker, any of the agents and brokers in Fresno County did not list another property, they would run out of inventory. It would take 1.1 month. If we didn't list any more properties today, it would take 2.4 months to run out of inventory, which tells you a little bit of a market slowdown, right? Taking longer to sell. But here's the interesting part. The homes that are going into contract are about 18 to 19 days now, under 21 days still, because they're picking the cleanest, best price homes. See, the buyers have choices, so now they're picking the best value. So they're still moving quickly because the serious buyers are buying, and they're getting rates through lenders and great lenders like Kurt for 4.75, great rates going on. So that's the truth of what's going on in the market. It's a great time to buy. The market is stabilized. Buyers, there's inventory to choose from, and the rates look like they stable, maybe stay that way for the rest of the year. We're looking forward to that. And I'm excited about it. The average, couple more things here. This is important. Average per square foot price has dropped. Not by much. It's dropped $1. So the average square foot price was 248 last month. Now it's 247. So prices are very stable. Slightly declined, but pretty stable, right? Okay. Now we talked about the days on the market, 19 to 21 days, moving very quick. A normal market's about 37 days, guys. So it's still a great time to buy. Here's a key stat, and I have this circled, so I know it was good. July average sold price is neutral. It was neutral. It's not going up or down. It's just holding its pattern. There was a slight reduction in sales price versus sold price, pending price. When a pending means you have a listing buyer, you made an offer, and now the property is pending. From active to pending with an accepted offer from a buyer. That number was down 1.8%, but that wasn't through the prices of the home. That was through negotiation with the good agent, bringing those prices down, negotiating for the buyer. The reason I tell the buyers that right now, well, sellers too. Sellers get real on your price when you list it. Let's get honest on that, so you can get this home sold. And then buyers, you can negotiate. The average is like 1.8%. So there's your closing cost, right, Kurt?
Yeah, that's right.
I love to get the buyers the closing costs, me and Kurt do, because we can get $10,000 in closing costs, taxes, everything combined. You come in there with just your down payment, and you're getting in low, getting in cheap, and then you get the house you want. So I'm excited about that. These are good stats for the market where we're at.
Definitely.
That's really all I have, Kurt.
I like it. It's a good market, and I mean, really now is a good time for everybody who was sitting on the fence to jump back off and get back into it because the rates are getting better. and you got a shot to get your offers accepted.
You know what I like to share? It they would ask us if the buyers were in front of some of us, us really. So what have you bought lately? Well, let me raise my hand. How many have I bought lately, Kurt? 3.
Okay.
I've got 2 right now that I bought as investments, and I'm rehabilitating, remodeling them.
Hmm.
Some all resell, some all buy and hold, probably, right?
I
So
like
it's a
it.
great time to buy.
Yeah.
And let me get rid of these fears. You know, you open up Google in the morning on your cell phone, right? Or you go to or you see the news. Be careful what you pay attention to, guys. Do some research. The news, how positive are they? Are they really positive or pretty negative? Pretty negative, right? So once in a while you'll see on Google or the internet or whatever, market could crash, market will crash, or market whatever crash. We don't have a financial crisis right now. That was 2008. And out of the last 5 recessions from 1980 to right now, we had 5 recessions. Let's call this a light recession. Out of those 5, 2 of the 5 caused, this is number 6 actually. So out of those 5, 2 of them had a large reduction in 2008 when we had the financial meltdown, right?
Hmm.
That had a large crash in price. That only happened before in the Great um, Depression back in the 30s, right? That's
Right.
the only 2 times. So that was almost 100 years, 80-year spread. Now, out of the 5 last recessions, only 2 markets had a large meltdown, which was 2008, and then a light reduction in price, about 10% off.
Right.
So we're gonna you're gonna get your reduction in price by negotiating. Not so much that the prices are going to be falling, and there is no crash. Crash meaning 20% or more coming off the prices of the homes, right? Nobody, very few people believe that. I know it's wishful thinking, but you're going to be paying 2 more years of rent while you're hoping this garbage out there that the market's going to crash, meltdown, which it's not, is going to be available. The rates will stay good probably, but the meltdown on price is not going to happen
Well,
because
and it's not going to happen because in order to have a price crash, a la, you know, 2008, you have to have significant foreclosures. And what happened after 2008 is the Fannie Mae, Freddie Mac, they fixed the system. All these goofy loans that, were pay option arms and negative amortization, all those things, they're all gone. So somebody to buy a house right now has to be able to afford it. We just went through a pandemic where all the essential workers, I mean, we had the best market that we've had. It went crazy because all the essential workers, they're buying homes. So in order to have some huge market crash, you'd have to have job loss, which we just survived a pandemic. So I don't see that happening. And
right,
you also have to have equity loss. And right now there's no equity loss. So people can list their house and sell it as opposed to having a foreclosure and some market crash. So I just
right.
don't see it happening. I
Yeah, and
don't.
then we also have a strong employment. I mean, there's
Right.
jobs out there for guys get to work. There's
Yeah,
lots of jobs,
exactly
so
right.
that's going good. Now the thing is, fuel, utilities, inflation is up, but they're curbing it already. So we're
Correct.
going to get that under control. So it's a great time to buy and get the home you want. And I want to tell you guys, let's say you want to wait 2 years for a crash that will not happen. Not going to happen.
I agree.
You're going to wait 2 years to hope that there's some price adjustments in sales as far as pricing of the homes. Okay, and let's say you're paying 2,000 a month, an easy number to realize. 2,000. That's the average rent in the United States right now. 2,000 a month, Kurt, and that's average. And that's supposed to go up. Rents are going to go up.
Oh
So
yeah.
rents are going up. A lot of buyers are going to want to buy, which keeps the demand pretty strong. Where we're not going to get a big old price reduction, so it's not going to happen. That
Yeah.
being said, when a buyer says hypothetically they 2,000 a month and they rent for 2 more years, they're going to have $48,000 that they're going to give another landlord that
That's
bought
right.
because he knows it was time to buy. He's
Yep.
collecting that money. They're paying his mortgage instead of that buyer paying their own mortgage right now and not throwing that money away because the
Yeah.
price reduction to what we're going to have to the interest rates and where it's going to be, you're better off buying now than waiting.
Yeah.
That's my study. What I believe. That's what you believe, right, Kurt?
Yep. I absolutely.
Okay, we're on the same growth pattern here. We understand what's going on, guys. Is there anything else you want to add? Anything, Kurt?
I don't know. I think we covered pretty much everything. I think the market's good. The opportunities for buyers are strong, and rates are getting better. Fuel prices are getting better.
How are
Everything's
you see?
starting to get a little better.
How are you seeing on your loan side coming through? Meaning this way, from listing price to sales price, or getting closing costs and things paid, you're seeing some pretty good negotiations for buyers on your side, aren't you?
Yeah, absolutely. Before, when it was, you'd list a property for 350 and you'd get 16 offers and they'd go up higher. Now we're getting a lot more offers accepted at the listing price, or, we've had a couple that are a little bit lower. We've had a couple with seller concessions. It's really a good time for the first time home buyer,
Right, right. And when
and
I'm
the
listing,
people that really need to get their foot in the game. I mean, real estate is
right.
one of the best ways to build wealth, if not the best, in my opinion. And we've got about 8 homes ourselves, and we're firm believers in real estate investing. And the best way to do it is to buy your first home and then continue to buy more properties after that.
That's awesome. Okay, well, let's wrap it up, guys. You can call
Perfect.
Greg Wrights on the real estate side. Wrights team out of Fresno, Clovis, Madera, California at 559-260-1777. And Kurt Goetz, local lender, Nexa Mortgage in Fresno, California. And his number is, what's your number there, Kurt?
It's 559-392-5009.
There you go, guys. So we're looking forward to working with anybody. We're here to help you. And hey, stay tuned for something. Me and Kurt are putting together a strategy success course. It's going to be probably, this is what I've got written down. Kurt still has to approve it. Second Wednesday of every month. We're only going to do 30 minutes. Maybe we go longer if we need to, but 30 minutes on a success strategy to build your business, your life, and growth. So you're going to love it. We look forward to that. And we've got a lot of good information to share and help people get successful in life. Right, Kurt?
Yep, sounds good. We're here
All
to
right.
help.
You guys have a great day. Talk to you
Thanks, guys.
soon.
Happy
Bye.
hunting.